Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. Well, yesterday we have here actually minimal changes compared to the Friday situation. Market is still calling ground resistance that we have specified. Well, speaking about this grabber, I wouldn't rely on it too much, just because market is gradually moving higher, and it's 2 times it already has been taken out by these new spikes up, and market's very close to the top. So I would say that probably this grabber is mostly dead rather than alive. We need to watch for something else to make the background for possible taking the short position. So currently on the 4-hour time frame chart, it is interesting performance. Actually, it is driven by the same expectations that inflation will be a bit softer, by the CPI numbers, which is should decrease the pressure on the Fed to rise rates as aggressively as they do it right now, which in turn suggests that there's more chances to avoid hard landing and getting the strong recession in the United States. This is just common background that everybody watching for and thinking in this way. But as we have shown you in the weekly reports, as in the Forex market, as in the gold market, there's no chances to avoid recession at all. It will be hard landing. And this is just, I would treat these current speculators, speculation around the CPI numbers and in general as just trying to shake the short-term boat, just make the public to make some positions and then grab their stops and by the market makers. So this is mostly have short-term tactic aim rather than really has some changing on the fundamental background right now. Anyway, whatever it will be, based on the performance that we have on the 4-hour time frame chart, it is not absolutely bearish. So because take a look, after the strong reaction on the OP and sharp sell-off that we have intended to use for possible taking the short position, we decided to watch for some bearish pattern here. In particular speaking, we talked about the possible Gartner's triple to sell, but instead of that, we've got the butterfly here. And the moment when the market just ignores the reaction on the OP and moving above it, this is not quite bearish performance. Yes, of course, it might be just a bit impacted by expectation of the CPI numbers, some inspiration that's probably will get the soft numbers and gold could show the rally and so on to the XOP. So that's why in the current moment, maybe his initial plan has not been triggered as it should be by the bearish market. So normal bearish reaction has not been shown. So probably it makes sense for another pattern. In particular speaking here, on the hourly chart, it seems that it might be something like Gartner's triple to sell. Three drive, because here instead of the triple two, we've got the butterfly, as I said. Market hits 127 extension, shows the bounce, but take a look, this is once again not the reversal. For reversal action, we need to get something of this kind. It's really straightforward downward actions, something of this sort. But that is a bit gradual, slow down, not reaching the lower bar yet, and turning up again, some coining. So other words speaking, the CPI now is pressing on the market and keeping it on the surface, suggesting some positive reaction. It's definitely clear, shows the sentiment on the market's performance. If our suggestion is correct, it will be the 3 drive. Take a look, the 127 extension stands very close to the 1618 of the first drive. It will be an area around 1739, 1740. Whereas potentially another swing up might be formed, and in general still will be around the same 1736. So since normal reaction has not happened, as I said, on the OP, it makes sense to wait for a bit stronger upward action, if of course CPI will support this. Of course, it might be that numbers will be strong and market could keep going lower immediately with the breaking just this downside. But as you understand, this is out of our control. We can't say it and predict this. We're mostly rely currently on the technical picture that we have, and recent performance suggests that market is not really shows not really bearish performance in the recent couple of sessions. It makes us wait a bit with taking the short position and see for some maybe other pattern what might be formed from higher standing resistance levels. That's in general what we think we could do currently on the gold market. Besides, you can see also here we have some kind of rising divergence, which is also typical when the free drive pattern starts to form.